Hi everyone, can you hear me? Just give me a thumbs up, please. Let's see. 5 waiting. Hello? Can you hear me, guys? Okay, so I'll get started with today's session. First of all, welcome to our third securities trading session. So just so you appreciate what I'm doing here, I'm looking at my laptop here, and I'm actually here is my other computer, and here is my water, and I got all the notes right here. So I'll be going ahead and starting this training for today. But just a quick recap from last time. What we discussed last time was support and resistance levels, Fibonacci levels, and moving averages accordingly. So quickly, I have right here in front of me BRTX. And basically, I'll show you pretty quickly what is the support and resistance once again. Support is where basically you have a lot of candles right here close to each other, and it shows that it's handling the chart and preventing it from dropping further. A resistance is, let me show you right here. Here's a resistance. Here's one resistance actually. When the price is increasing and then it hits this portion, that's a resistance. Not a very, well, actually a very strong resistance, and you can see one right here as well. So we've discussed those, and then we've discussed Fibonacci levels. The Fibonacci levels are the levels which help us, once again, I'll chart it really quickly right here. So here's a Fibonacci level, once again, from swing low to swing high, as we mentioned. And then it gives you the levels at which certain traders actually trade, either wanting to exit or enter into a position. And again, these Fibonacci levels are, you need to take consideration of them and see whether they break through to the next level or not. We also discussed the Fibonacci extension levels, which are basically helping us find out where does a stock expected to increase after it has retraced in its position. And we said that we connect actually the dots from swing low to swing high and then to where it retraced, and then it gives us some numbers in order to better appreciate how high or how low it's going to go. And there's an example: swing low, swing high, and then back to the low, and then it shows us where it can potentially increase accordingly. And last but not least, we discussed the moving averages. So we have simple moving average and we have an exponential moving average. Simple moving average, basically, as we've discussed, takes the average of the last X number of periods. So for example, if it's a 5 hour moving average, it will take the last 5 hours and just simply add the data and divide it by 5. An exponential moving average, we said that basically it takes more in consideration the more recent data points in order to give more accuracy to the chart. Okay, excellent. So now we'll move on to this session. In this session, we are going to discuss Japanese Candlesticks, moving MACD, and Stochastic RSI. Of course, I'll take all general questions just like last session at the end. So if you do, please feel free to type them away even in the chat, and I'll revisit them once we're done. But before starting, I did receive a couple of questions from the earlier sessions about how do I do my setup here on TradingView. So how do I show the Stochastic RSI? How do I show the MACD and TTM squeezes accordingly? And then how do I add these moving averages? So great questions. All I do is basically see where there is here function of x right here. All you need to do is to actually look for stochastic RSI right here and just click on it and it will add it. Of course, it's added already. And we'll discuss the actual metrics or data points that needs to be taken into consideration when actually inputting a stochastic RSI. So what are the settings for stochastic RSI later on? Similarly, if you're looking to add the MACD, all you need to type is MACD and then add the click on it and then add the respective settings accordingly. It will all show on your chart, and then you can actually move it around depending on the way you wish to place it. So for example, if I want to move this up, I'll just click up right there. And if I want to move it down, I just click down. So that's pretty much it. And moving averages is the same thing. Just make sure you enter moving average. And if you're looking to add exponential moving average, just type exponential moving average and it will add it accordingly. Okay, so the first part of the lesson is going to be about the Japanese candlesticks, and I'm going to go with the basics. So what is a candlestick, basically, and then go into the most popular candlesticks. And I'm only going to discuss the single pattern candlesticks. I'm not going to discuss dual and triple so as not to confuse you accordingly. So for the a candle, if we look at a simple candle, so let's look at here. Okay, perfect. So let's take this candle, for example, okay? The red one right here. So the top part, for example, we call it the upper shadow or the upper wick, okay? And here, because it's a bearish candle, this is the open price right here. Then you have the closing price right here. And then you have the bottom wick or bottom shadow. And everything in between, the red part is called the body, okay? For a green candle, let's take this one, for example. We need one that has a wick. Okay, right here, for example. The bottom part will be the bottom shadow or the bottom wick. This part right here where the body starts is the open. Notice it's the other way around now. And then the top part right here is the close. And then the upper wick or the upper shadow is the candle. Okay, so it is pretty much the same. You just need to remember that for the bullish candle, the top is the close and the bottom is the open. And for the bearish candle, the top is the open and the bottom is the close, and everything else is the wick, and the central part is the actual body. Okay, so that's pretty much what is a candle. Now we'll discuss the different types of candles that are most popular. And we'll start with the first one is called a spinning tops, okay? So the spinning tops is actually when the body is right at the center and it has longer wicks on both sides. That's what we call a spinning top. And let me give you an example. I have here BRTX November 6th. Okay, let's go back. November 6th at 11 a.m. Right here. Okay, so right here you have basically a spinning top candle, and let me move on the side exactly right here. So this candle shows you here is the body, here is the top wick, and here is the bottom wick. And basically what it shows is that there is indecisiveness between the buyers and the sellers, and that's why you'll notice that the body is so small right at the center, because buyers are trying to push it up and sellers are trying to pull it back, and they're struggling to do something or to win or to lose. And that's why the body is just right in the middle and the wicks are equal inside. And this is what we call a spinning top in Japanese. Again, this is right here. The body is right at the center, and the top wick and the bottom wick are almost equal in size. Okay? If this is all overwhelming or confusing, please be patient. At the end of the session, I'll be responding to all questions once again. Then the next one is called marubozu. Okay, and there are names that you don't have to remember them. You just need to recognize them every now and then. And once again, if the candles are too overwhelming, just try to appreciate the trend. And that's what we've discussed in the past. So the marubozu is actually a candle that has no wicks. It's a full body candle. Okay, so there is no lower shadow and there's no upper shadow. So no lower wick or upper wick. So we have an example in BRTX November 19. Oh, actually right here. No, November 19 at 10 a.m. So November 19 at 10 a.m. Okay, right here, exactly. So notice this candle. It's a complete body. There's no upper wick. There's no bottom wick. This is a marubozu. The marubozu, when it's red, it's a very bearish signal. Okay, if it was green, so if it was this without the wicks, it would be a very bullish signal. In fact, this one is actually bullish because of the fact that the length of the candle and how bullish and greenish it is. It's obviously a bullish signal. When you look at here, look how of the length of the red here, that's a bearish signal. But marubozu, if we're gonna focus only on that, it is a candle that has no upper wick or bottom wick. It only has a full body, and in this case it is bearish. Okay, the next one we call is a doji. So a doji is actually when you have a candle with the same open and same closing price. It has small to no body basically. And I'll show you an example right now, but basically this candle shows also an indecisiveness. Neither the buyers nor the sellers have actually won in this case, and I'll show you one from October 23rd. So let's go back. If we go to October 23rd at 3 p.m. Right here. Okay, let me expand it a bit more so you can see it. There you go. It's right here. You can see there's an upper wick, there's a lower wick, and once again, the body's squeezed right in between. So neither the buyers nor the sellers have actually won in this case. They're both trying to actually push the price either upwards, and the sellers are trying to push the price downwards, and both are struggling, and the body is basically sandwiched in between. So that's why we say it's an indecisive manner, and it reaches to a point that actually the sellers and the buyers become exhausted. If it's actually moving upwards, then the buyers are gonna get to a point that they're exhausted and they can't push the price any longer. And if it's going downwards, then it will reach to a point that the sellers cannot push the price even further down. And this is actually an indication that there could be a potential reversal in the trend accordingly. The next one, and actually before we move forward, this actually the example proves that there's a reversal in trend. Notice, because the buyers and the sellers, neither of them actually won after a complete period of consolidation, guess what happened? There you go, the reversal happened and it started increasing in price. Okay, so again, don't assume that if you see a candle like that, like a doji, that means it's going to reverse. Wait until you see the next candle to actually confirm that the reversal has already happened. So even if you notice in this example, this next candle wasn't very bullish. It was basically once again trying to move in the bullish direction, but neither the buyer nor the seller is won. In fact, there might have been a low volume here, and this is the single entry. But the next candle right away, you can tell that things are moving in the right direction, and a bullish pattern has been confirmed. So wait for a couple of candles before you can actually call something whether it is bullish or bearish accordingly. So the next one is what we call a hammer. You probably heard of this, a hammer or a hanging man. So these are normally little bodies and long wicks. So let me just find you an example, which is October 26th, 11. October 26th, 11 a.m. Okay, perfect. So this is actually, since it's red, it's a hanging man, okay? So notice the wick, the lower wick in this case, is normally 2 to 3 times the body, okay? And this is the body again, and this is the wick. There's no upper wick here, or in some cases it's a very small wick. But the most important thing is that the lower wick in this case is 2 to 3 or even 4 times the size of the body, okay? For a hammer would be exactly the same thing, so there's no difference, but it would be green, and you would have a 2 to 3 times also the body, but it would be an indication of also a reversal, but in a bullish manner. Now, one thing again, same as what I said earlier, if you are going to look for these candles, wait until the next and third candles to see a confirmation. So if you actually see a hammer, don't just jump in because you saw a hammer and decide to actually move to buy something. Move forward only when you see a confirmation, okay? The next ones that we have, oh yeah, so that's actually a very important point. Why did we call it a hammer? We called it a hammer because the way people were thinking about it is that the market is hammering out a bottom, okay? So the market is actually moving downwards, and then you see this green hammer. So it has identified a bottom right here. It has hammered a bottom, and a potential reversal might appear, okay? Similarly, for the hanging man, the market might be bullish, but then you have a hanging man similar to the one right here, and it might start decreasing. Why do I tell you pay attention to the following candles? Because notice right here, there's a hanging man. However, what happened? The trend actually moved upwards. So it's good to notice them, but it's also important to confirm that that is the trend or not. The next ones are what we call an inverted hammer or a shooting star. And just like the name indicates, an inverted hammer is just like what we discussed 2 seconds ago, which is the hammer, but it's the other way around. So the body is at the bottom, and the long wick is at the top. So the body will be at the bottom, and then you have 2 to 3 times or 4 times or 5 times long wick. We have an example on BRTX November 6th at 9 a.m. So let's go to November 6th. Okay, let's go. November 6th at 9 a.m. Okay, right here. There you go. Once again, it's a bearish. So notice here is the body, here is the long wick. Body and long wick. The wick is actually 5 to 6 times, if not 7 times the body. And whenever you have that, it is a bearish sign, okay? So, and it happened that once we saw this shooting star, it actually started decreasing. Notice right away, it started decreasing all the way down. So once again, if you're seeing the shooting star, just take notice of this candle, but do not go short. For example, if you're shorting, do not go short right away. Wait for the confirmation, because just a bit earlier, right here, see, we saw the hanging man, yet it did not actually reverse. It actually moved up. So always look for a confirmation in the next candle. And yes, you might lose a little bit of profits, but it's better to wait and have less profits with a confirmation that the trend is reversing than to actually jump in and be surprised with a reversal in the trend. Okay, so those are the main candles. And as I mentioned, there are other types of candles, which are the dual candlestick patterns. And some of them are like engulfing candles. You probably heard of tweezers. There's bullish tweezer, there's a bearish tweezer. There's also triple candlestick patterns like evening and morning stars, three white soldiers, and what have you. I'm not going to go through all the detail of these candles because at the end of the day, it's going to confuse you. So if you're interested, there's a lot of material online about these double and triple candlestick patterns, but make sure you recognize the single ones because you will be assessing them as you're doing trading accordingly. Okay, so those are the candlesticks. Again, if you have any questions about the candlesticks, please save them till the end and I'll be more than happy to respond. Welcome, Lucas. Great to have you here as well. Hi, Martin. Hi, AA. Okay, excellent. So these were the candles, the Japanese candles. And the next point we're going to discuss is the MACD. So MACD is actually short for moving average convergence divergence. Okay, and I'll discuss shortly what is convergence and what is divergence and when do they happen. But basically, they're used to identify the moving averages that are trending, basically, that are indicating a new trend. So you'll notice that whenever I'm doing an analysis, I refer to moving averages a lot, especially in my videos. You'll notice that I refer predominantly to the moving averages right here. And then I start discussing the stochastic RSI, which I personally put a lot of weight on. And then I refer to the MACD, or the moving average convergence divergence. Okay, now there are certain settings that we typically put in place for the moving average for the MACD, and these settings are normally 12, 26, and 9. So just make sure that on your chart, irrespective of what you're using, if you feel comfortable, that you have these settings in place: 12, 26, and 9. And these basically, the first number calculates the faster moving average, which is basically the 12. The 26 represents the slower moving average, and the 9 represents the difference between the moving averages. Okay, and you might be thinking, why 12 is faster than 26? Because it looks at the last 12 periods. Okay, so for example, we're looking at the past 12 hours on this hourly chart. Okay, and so the period is shorter and it moves quicker. And then if we're looking at 26, then we're looking at a 26-hour period, a longer period, and it will take time to move accordingly. If you remember from our last lesson, we said the 5-hour moving average is normally closer to the price action than the 50-hour moving average or the 200-hour moving average. So similar here, the 12 right here is the faster one, and the 26 is the one that is slower, and the 9 is the delta, so the average. It's not 26 minus 9, it's actually the difference between the moving averages accordingly. Okay, so yeah, so what is convergence and divergence? So notice right here, when the signal, the blue line, and by the way, the orange is the signal, and the blue line is the actual MACD. And how do you confirm that? If you have any doubt in terms of which one is the signal and which one is the actual MACD, you just click on the settings, go to style, and you'll notice right here, hold on. First of all, I'm clicking actually on the stochastic, sorry, the MACD. Here's MACD. So if you have any doubt, you'll click on the MACD and you'll notice that the signal is orange and the MACD is blue. Okay, so if ever in doubt, just click on the settings and confirm it accordingly. And the inputs, once again, fast length 12, slow length 26, the signal smoothing, which is the delta, is 9. Okay, perfect. So what is actually when we have a divergence? Okay, so when the price right here, so takes off away from the signal, so the price is moving away from the from the signal, that's called divergence. Okay, it's actually taking off away from the signal, the MACD. Now, when the MACD comes close to the signal once again, it is convergence. Okay, so it diverges away here, and then we wait for a convergence. So whenever I say in my video review that, okay, the chart actually looks bearish, however, we're starting to see that the gap is closing. What I mean by closing is that it is converging closer to the signal, okay? And how do we confirm the convergence? Is using the histograms. Notice when the MACD is close to the signal, the histograms are small. As you diverge away, the histograms become larger. Okay, in this case, it's becoming bearish. When it starts converging, the histograms shrink in size. You can see here, it was converging right here to become bearish. The histograms got smaller in size. When the MACD was moving away from the signal, the histograms were smaller and then they were growing in size. So you diverge, the histograms grow in size. You converge, the histograms shrink in size accordingly. Okay, so relevance when it comes to charting, and we'll obviously discuss these in later sessions in terms of what is the relevance and how do I use them for trading. But just to give you a quick overview of how they're used, or how I personally use them. So when I see, once again, a MACD starting to show the pinkish, since I'm a bull, I rarely short stocks, if ever. When I start seeing the pinkish, I know that the reversal is about to happen. However, the size of the blocks, as I mentioned earlier, is extremely important to me as well. So that's why I sometimes say in my video reviews that there's bearish signal, however, it is attempting to reverse, however, it's early days. Because the blocks are still not small in size, and the MACD hasn't converged to the signal accordingly. So I keep a very, very close eye on these to ensure that I would say that a reversal pattern has kicked in. Of course, after checking the stochastic RSI. Okay, so just keep a close eye on this as well. I personally think that the stochastic RSI and the MACD, along with, of course, the moving averages, are my favorite indicators of whether to move forward and buy a stock or decide not to enter into a position accordingly. Okay, you'll notice when, for example, on Friday, when I said that I will enter into a position into BRTX, I actually said it publicly. It's because the stochastic RSI was beaten down. Okay, and I saw the light pinkish blocks. Of course, if you're extremely risk averse, you will wait until these blocks get smaller and then you would enter. For me, personally, I thought that if it's already beaten down, the stochastic RSI is beaten down as it is right now, and it's showing the pinkish color already, okay? It's fair to assume that eventually, whether in the next hour, 2, 3, this will take off, okay? It might decrease in price. There's nothing that is certain. However, you're actually picking something at the very bottom, okay? It is already beaten down. Yes, it might get beaten down even more, but your entry is actually a good one, at least from my perspective. Okay, so that's the MACD and how you can use it to your own advantage in order to do better trading. Okay, so the next one is actually the stochastic RSI. So this one is actually interesting. Some people refer to it as the stochastic RSI, and some people, in order to differentiate between it and the regular RSI, they refer to it as the stochastic oscillator. Okay. The difference between the two is quite large, actually. Some people prefer to use a regular RSI to assess the chart, and others prefer a stochastic RSI. And I'll tell you the difference. The RSI is actually the derivative of the price itself. Okay, so it depends directly on the price on the chart. The stochastic RSI, or the stochastic oscillator, is the derivative of the RSI itself, or a second derivative of the price. Okay. Another difference is that the stochastic RSI actually moves quicker than the RSI itself. So it will actually move into the overbought area quicker than an RSI would, and it will move to an oversold area quicker than an RSI because of the dependency on the price. Hopefully this is making sense. So the RSI is a derivative of the price. The stochastic RSI, or the stochastic oscillator, is a derivative of the RSI itself, or the second derivative of the price. Okay. Okay, we've covered that. So let's look at now the real example right here. So we're looking at, again, BRTX chart. We'll notice that this is actually the 20 mark line, and this is the 80 mark line. When the actual blue line goes under 20, we say it's oversold. when it's above the 80, it is overbought. And traders normally use that as an indicator of whether to buy or to sell. When it's in oversold, we tend to buy. When it's in overbought, we tend to sell. However, there's a caveat here. If the chart is, or the price is actually in the overbought area, do not assume that you need to drop your ticker and sell immediately, because sometimes it is actually in the overbought and it continues to increase accordingly. I do have an example actually of TSNP. Let me just show you an example. Okay, November 13. November 13. Okay, perfect, right here. Okay, so let's look at that chart here of TSNP. Notice right here, we entered into the overbought area, okay? However, if you would have actually dropped your shares or stocks at this level, you would have lost all of this potential gain, okay? You would have probably been very, very disappointed. That's why you need to again monitor the movement of the stochastic RSI. What do I mean by movement? Notice right here, it actually went inside, kept on going up. So you definitely did not have to sell over here. You definitely did not have to sell over here or here or here or here, because it was still going upwards. However, the difficult part comes in once you actually hit the top right here. This is where you need to keep a very close eye on the way it is actually the blue line. Remember, the orange line is the signal. The blue line is what you need to focus on. You need to ensure that the blue line is always on top of the signal, okay? And the moment it crosses the signal, you need to make sure or confirm that it's bearish or potentially reversing. You notice in my video reviews, I say it turned bearish. However, we don't know if it will actually reverse and move up once again, okay? So here is an example. It actually turned bearish, but then it moved up slightly bullish, and then it reversed once again and became bearish. Okay, so let's go back to our example right here. So the line, if you see the line actually continuing to move horizontally straight, supported by a very bullish MACD, then it's a very good indication that you must hold on to the price, hold on to your stocks and not sell them. And it's a very good indication that the price will start increasing even further, which is exactly what happened here. So if we expand this a bit more, you'll notice it went straight horizontal, okay? And then it dropped here. Notice the drop on these parts. And then once again, it took off before the big crash, which is the red candle right here. Okay, and notice if you notice the MACD, you'll notice the decrease that happened just right here. Okay, so once again, if you're in overbought, it doesn't mean that you have to sell immediately. Watch the shape of the line. Similarly, if you're in oversold, it does not mean that you immediately buy. Again, look at multiple indicators and see when you need to enter based on a confirmed reversal. The confirmed reversal is when we see convergence and the blue line crossing the signal upwards. It will be more expensive that you're buying it at, for sure, but at least it's a confirmation that the reversal has actually taken place. Similarly, when you're going bullish, you don't sell immediately. You sell once you see the blue line actually crossing the signal downwards in a pretty strong manner. Okay? Or else you will be missing on an opportunity to reap more profits. Okay? I think that's pretty much it for the stochastic RSI. Is there anything that I'm missing here? Nope. Yep, that's pretty much it for the stochastic RSI. I'm sure there might be a lot of questions because I know this is heavy stuff to some of you, especially the ones who are trading just newly to this. So please feel free to ask any question, any basic question, even if it is. Don't worry about it. Just let me know, and then I'll answer these questions accordingly. And if there's no questions, we'll do this as a wrap. Any questions from anyone? Okay. I'm assuming everything was crystal clear in this case. Okay, perfect. So in that case, thank you all for attending the training. I appreciate your... Okay, if you have a system that... We have a question. If we have a system that doesn't have a TTM squeeze, what would you suggest? Okay, so I haven't discussed... Great question, Thomas. I haven't discussed the TTM squeeze yet because not a lot of people actually use it. If you don't have it in your system, then I suggest that you just stick with the stochastic RSI, MACD, and the moving averages. That's personally what works best for me. A TTM squeeze is only an indication that a consolidation period has ended and there's a price movement that is about to happen, either upwards or downwards. Okay, so a TTM squeeze does not always mean that the price will shoot up. It could actually mean shoot down. And there is a way of identifying this through exponential moving averages. And I'll explain that in later sessions as well. Okay, excellent. Do you use TradingView to follow the stock live, or do you use it just for trading? Charting. Okay, great question, Jamie. I actually use TradingView for charting purposes. I do not use it for trading whatsoever. I use the other platforms like IB, TD Ameritrade, and what have you for trading, but my TradingView is purely for charting. Okay, hopefully that answers it. Hisham, thank you. Pleasure. Awesome. Any other questions, folks? Okay, if you do have any questions, you know how to catch me on Twitter, on YouTube, or anywhere. In that case, as we're looking at TSNP, the stochastic bottomed out, but price stayed flat and consolidated. When you see consolidation like that and the MACD stays above, would that give a better uptrend? Okay, let me read that again. As we're looking at TSNP, the stochastic bottom out. Where is that? Okay, the stochastic bottom out. All right, but price stayed flat and consolidated. When you see a consolidation like that, and that the MACD stays above, would that give a better uptrend? I'm not sure I understand the question, Chuck. Where exactly are we talking about in terms of bottoming down. I'm assuming you're speaking right here and that the MACD is recovering. Can you kindly just rephrase it, and I'll be more than happy to respond to it. Why does the color green changed, example, on November 16 and 17 on TSNP, November 16 and 17? Okay, right here. I assume you're speaking right here. So if not, just let me know. When it's dark green, that's an indication that the divergence is actually happening, that it is going on a bullish uptrend. The moment it turns light green, that's when you need to actually pay very close attention and know that you might be entering a bearish movement. Similarly to the red and light pink. When you're in strong red, then that's actually a very bearish trend that you're going into. Once you start seeing the light pink, then the trend is actually reversing and you're becoming more bullish. Okay? So hopefully that answers the question. Okay. I'm just waiting on Chuck's question again. I'll read it once more. As we're looking at TSNP, the stochastic bottomed out, but price stayed flat and consolidated. When you see consolidation like that and the MACD stays above, would that give a better uptrend? Oh, okay. I think I got it. Yeah, you can. Yeah, feel free to DM me later on, but I think I understood it on a third time. What I'm saying here, Chuck, and if I don't respond, yeah, feel free to DM me directly. Look at the stochastic RSI when it bottoms out completely, for an indication of whether the price will continue to decrease or not. So as I mentioned, a horizontal line at the top means that the price is probably going to continue to increase. A horizontal line at the bottom is probably an indication that the price will continue to decrease. Must be supported with a MACD that is bullish for a horizontal line on the top, or a MACD that is bearish for a horizontal line at the bottom. So if the horizontal line is shaping up at the bottom of the stochastic RSI and the MACD is bearish and has not started to show the light pink blocks, then you probably know that the price will continue to decrease until you see a slight pink and slight reversal with the stochastic RSI. Then you will be able to say that probably the downtrend has ended. Okay, hopefully that answers it, but if not, please feel free to DM me. What does it mean when the stochastic RSI is very bullish and the MACD is showing bearish? Okay. Good question. I'm trying to find where exactly could it show. So the stochastic is very bullish and the MACD is bearish. Can you give me an example of where you saw that, Wendy? Normally, if you actually see, I'm going to answer it based on the example that is in my head. Normally, if you see a stochastic RSI that is bullish and the MACD is actually bearish, that's a good indication that a reversal may be happening shortly. However, if the MACD attempts to reverse itself as well, then the price might be increasing. It was on a different chart, STHC. Let me go to STHC. Okay. STHC, here you go. Okay. Yeah. So I'm assuming you're talking about an example just like this, right here. It went bearish, yet right here it's bullish. Okay, so good example right here. Notice that it went bearish, okay, decreased. Notice right here on the MACD, the MACD actually showed a bearish trend, and you'll actually, if you zoom in closely, you'll notice that it dipped a little bit. So it might appear that it's bullish, but it actually dipped just right here. So it is matching exactly with the stochastic RSI bearish trend. Now, when it took off right here, you'll notice that the stochastic RSI also took off a little bit. So always assess whether the MACD is bearish or bullish based on the coloring of the blocks. So yes, it might appear bullish, but it could, for a short period of time, become bearish. If it reverses completely, you can bet that the stochastic RSI will also start to descend in price accordingly, or descend in the opposite direction accordingly. And that's exactly what you see right here. So it descended completely, and although this may appear as bullish, still in bullish, look at the blocks, how smaller they were getting every now and then. Hopefully that answers your question, Wendy. Can you look at Opti? The lines are below the pink and green bars. Let me look at Opti. Perfect. Opti, here you go. Okay, so the lines are below the pink and green bars. Oh, okay. Yeah, so okay, that doesn't matter. That is okay. That's actually a very nice observation, Chuck, right there. So that is actually just telling you that earlier it was extremely bullish and the price was very high, and that's why you'll notice right here, if you notice the price, it was in an uptrend and it was above the histogram, okay? And then it started descending, and it became just below the histogram accordingly. So you know it has actually not bottomed out. Just be careful with that. It has descended below a previous high, and that's why it just ended below the histogram. Very important not to misinterpret that, because based on this analysis, someone might think that this is actually the bottom. So the price is the bottom right here, which would be the wrong assumption, because if you notice right here, we had a lower price point, yet the MACD was at a higher point with respect to the histogram. So just keep the histogram as an FYI. Only look at the coloring. At least that's what I do. I only look at the coloring for the histogram, and just keep a closer eye and perspective on the movement of the blue line versus the signal. So don't give it too much whether it's above the histogram or below histogram, because I personally do not. Hopefully that answers you, Chuck. Okay, awesome. Okay, folks, any other questions, or we can wrap up? Okay, fantastic. So guys, thank you very much for your time. I appreciate it once again. And if you don't mind, please continue to like and subscribe to the channel. Spread the word. Let's grow as a community. And I look forward to the next training sessions with you guys. Have a great evening and wish you all the best.